All right, welcome to this explainer. Look, we are right in the middle of a massive paradigm shift in corporate finance today. We're finally moving away from those painful, time-consuming manual reports and stepping straight into a brand new era of highly secure, air-gapped AI agents. And today, we're going to zero in on how Google's Gemma 4 is essentially the engine driving this entire transformation.
Here's our roadmap for today. We'll start with high-level corporate finance strategy, then drop right down into the deep technical architecture of these cutting-edge models, and finally, look at how all this actually plays out in the real world.
Let's kick things off with the autonomous finance era, where we're shifting from reactive reporting to proactive workflows.
Just to put things in perspective, by 2026, a staggering 56% of finance leaders report using AI. I mean, that adoption rate is practically doubled in just a few short years. The financial sector has officially crossed the AI adoption chasm. It really is everywhere now.
But here's the catch, and it's a big one. As our sources reveal, the vast majority of this AI usage is what we call shallow. Think about it. Teams are mostly using these general-purpose cloud chatbots just to summarize meeting notes or maybe draft a quick email. Meanwhile, the actual heavy lifting, stuff like variance analysis, continuous close, complex revenue recognition, the grueling tasks that keep your team working over the weekend, yeah, those are still painfully manual.
Which brings us to a crucial dynamic: agents versus traditional analysts. This is really about a partnership of scale and human judgment.
If we want to get past that shallow adoption, we have to look at this as a partnership, definitely not a replacement. On one hand, you've got AI finance agents bringing unbelievable speed, massive scale across your systems, and total consistency to repetitive workflows. On the other hand, traditional human analysts are absolutely irreplaceable. You still need that human touch for contextual judgment, ethical review, stakeholder negotiation, and, well, strategic accountability. Basically, the AI prepares the ground, but a human still makes the final call. So the winning playbook here is something called governed autonomy. Let's be real, finance is way too sensitive for just unchecked automation. You absolutely have to keep humans in the loop for anything involving sensitive compliance, taxation, or regulatory exposure. The AI handles the repetitive intelligence work, gathering the data, spotting the weird anomalies, while humans maintain firm control over the policy and the actual judgment.
Now, if AI is so amazing, why are core financial operations still so manual? Let's talk about the cloud security bottleneck.
The hesitation basically boils down to a few major hurdles. First up, data security. You literally cannot send unredacted general ledgers or highly sensitive payroll data to some public cloud API. It's just not going to happen. Second is model precision. A financial AI cannot hallucinate decimal points or misplace variables, period. Third, compute costs. If you want to run massive open-source models like the 397 billion parameter Qwen 3.5 on your own servers, the compute costs and server racks required are just astronomical. And finally, unstructured data. Pulling accurate info from complex PDFs and massive, messy contracts is still a huge struggle for standard AI.
But here's where it gets really exciting. Let's look at the perfect technical solution: Gemma 4's local breakthrough, offering maximum intelligence with a minimal footprint.
Google's Gemma 4 basically throws the brute force size approach right out the window. Instead, it focuses on hyper-optimized architectures. Take the 31B dense model, for example. It delivers heavyweight reasoning that goes toe-to-toe with way larger models on the global Arena AI leaderboard. And then there's the 26B model, which gives you just blazing fast edge inference. They completely maximize intelligence per parameter, making them absolute game changers for enterprise use.
Now, how does that 26B model get so fast? It uses a mixture of experts, or MO, architecture. Think of it like a highly efficient traffic cop that routes tasks only to specialized subnetworks. So it punches like a heavyweight but runs at the blistering speed of a tiny 4 billion parameter model simply because it only activates 3.8 billion parameters at any given time. You get frontier-level reasoning, but it easily fits on a single enterprise GPU. That drastically slashes the cost of deploying AI on-premise.
On top of that, Gemma 4 packs a massive 256,000 token context window. And look, that's not just some nerdy technical spec, it translates directly into massive business value. It completely wipes out the old problem of AI choking on giant documents. With a memory capacity this big, Gemma 4 can instantly digest a 150-page master service agreement or even your entire historical general ledger in one single prompt, all without losing the plot.
It is also custom-built to extract structured data flawlessly. Gemma 4 introduces this wild new thinking mode that lets the model deeply reason through complex financial logic,
generating advanced reasoning traces before it even answers. Combine that with crazy mathematical precision. It scores a massive 89.2% on the AMY 2026 benchmark. Plus, it has native support for agentic outputs. So instead of spitting out chatty, conversational text, it's engineered to output perfectly formatted JSON payloads, exactly what your internal databases actually need to function.
Okay, so what actually happens when you unleash this hyper-efficient, highly precise model into the real world? Let's check out real-world financial automation and running governed autonomy on the enterprise edge.
Enterprise platforms are already all over this. Wavenetic's Waveflow platform, for instance, is leveraging Gemma 4 locally right on their proprietary Wave node hardware. Because Gemma 4 doesn't need a massive cloud supercomputer, it can run completely air-gapped. That means your highly sensitive payroll data, unreleased quarterly earnings, vendor contracts, they literally never leave your internal network. You are getting frontier cloud-level intelligence with absolutely zero cloud data exposure. Huge.
This completely flips traditionally manual processes on their head. Look at AS606 revenue recognition. In the past, a technical accountant would spend days, maybe weeks, manually reading contracts to schedule revenue recognition. But with local AI, it becomes a seamless, autonomous workflow. Step 1. It instantly ingests that beast of a 150-page PDF contract. Step 2. It uses that advanced reasoning we talked about to isolate specific performance obligations and standalone prices. And Step 3. It generates a native JSON payload that pushes structured data and exact journal entries directly into your ERP system. No hallucinations, no manual data entry. Just done.
The real-world return on investment here is just off the charts. By running a local air-gapped Gemma 4 model, finance teams are taking routine chores, like VAT compliance, from an agonizing 8-hour scramble down to just 30 minutes of AI-automated processing. It literally transforms your team's end-of-month chaos into a calm, real-time, continuous close.
So as AI inevitably shifts your team's focus away from mindless data entry and over to high-level strategic governance, the landscape of autonomous finance is changing, and it's changing fast. The safest career move right now? It's not trying to compete against AI. It's becoming the professional who knows how to govern and partner with it responsibly. The tools are here, they're highly secure, and they run entirely locally. So the final question I want to leave you with is this: how are you adapting to this new landscape? And are you ready?